Hey everyone, and welcome to the PivotBoss Closing Report for January 7th, 2016. I am Frank Ochoa, aka PivotBoss, with your current analysis here for the ES. We actually got the significant downside break. As you know, in our pre-market report, we talked about the overnight break. Earlier in the week, we talked about the 1991 to 2102 key zone. That key range right there was very important, but more importantly was the LVN, right? The CLVN here at 1981 half. And I mentioned that once that level goes, you're likely going to see a swift move into our first target at 1935, followed by a likely continuation into 1879s. And so far, we reached that first target already in the first session. A big time move right to our key level. As you know, I mentioned earlier that key target comes from 1991 to 2102. Basically, this is just a 50% expansion from that key range. A 100% expansion is represented by that 1879. Typically speaking, when you break out from a range like this, you usually see a move that's equidistant to the range itself. And that's exactly what we're seeing so far. Additionally, if you look back here a little farther out, you can see I have another key range. That's the 2087s right there. And 2087s is very important because it's the top of that impulse move. So we had 2087s here, and it dropped down into these 1814s, and that gave us another key range to watch. And what I've been talking about to our premium members for some time now is that 2087 there, when prices failed to hold above that zone here late in the year, I mentioned that if there's failed range expansion above that level, the implication is usually a move back to the center of the range, followed by a move all the way back to recent lows of that range. So while we could see a move into 1879, we could see a further follow through into the 1814s. So that's something to look out for. Now, one more thing here. Anytime you see a big time move like we're seeing now, you're going to see a point where we do snap back and bounce at some point. And any bounce is likely going to be seen as a selling opportunity, at least during this first wave of weakness. So any bounce back into 1981s could provide a solid sell opportunity for a continuation lower. Also keep in mind that anytime you have a session with this higher range here, as a matter of fact, the range for the ES was 213% of ADR. It's been averaging 29 points per day over the last 10 sessions. Today was 62.5 points. That 213% right there is huge, and what that usually means is you could see an inside day or some type of digestion day in the upcoming session. So look for a potential bounce and a hold at these lows ahead of the next continuation lower. All right, let's take a look at crude oil. Here's crude oil. We've seen a significant breakdown from our key range as well. We had that narrow range from the 38s down to about 35. We talked about how that narrow range right there, chopping around composite VPOT, implied that we could see significant expansion soon. We got the expansion here. The previous session, and we got a follow through into our first target. We talked about that first target being 33.20s. We reached it, and now what we could see is an overall continuation into that 28.91. As you recall, that 28.91 actually comes into play from the larger key range looking backwards. So if I scroll this out a little bit here, you recall that key range from 40.69 up to 52.47. That range is very important. And very similar to the ES here, we've already reached basically the 50% expansion point. That's the 34.80. Closing below it implies that we could see a further on follow through into the 100% expansion target, which is 28.91. Now keep in mind, markets don't drop in a straight line here. You usually see some sort of bounce or reaction rally. And the tail here implies that we could see some sort of a bounce. But any bounce is likely going to be seen as a selling opportunity, at least near term. Again, watch these 35.35s or perhaps 34.80. That zone could be defended by bears for a shot at another round of weakness into that 28.91. All right, let's take a look now at gold futures. We mentioned before that gold had formed a narrow range similar to crude oil. It had been chopping around composite value, 1072.10, and I mentioned that bears would look to defend the top of the range here at 1088s, but a failure to hold above that level, meaning a close beyond it, would suggest a full-on breakout and that would pave the way to our primary monthly bull target at 1112.70, followed by the high potential to see a move into 1130. So we've come very close now to seeing that 1112, and we're likely going to see a further on follow through. Now, very similar to the others wherein I have my key range here, 1077.90 up to 1169.70. That's your key range. And what I talked about to begin the year was that prices were chopping around and attempting to hold below that level, with bears coming in to defend. But if those bears get their initial stops run, you could see a massive short squeeze, which takes you all the way back to the top of the key range. So overall, we could be looking at a full-on continuation into 1169.70 ahead. Now, keep in mind, any pullback into 1088 likely offers a retest buy opportunity, a buy the dip type of opportunity for a continuation higher. So now let's take a look now at the NQ. Here's the NQ in a daily time frame. This one's very important here, very similar to the ES, breaking down from that key range. We had the key range there set 44.49 up to the 47.20s. We got the breakdown through that level, and look at this massive move we've seen here. Just a significant move overall, and we've already reached the first target. Our first target was 43.11.5, followed by the next target being 41.74. Now again, we saw a massive range here, 200+% of average daily range. Anytime you see a big time range like that, you usually see a small bounce back and perhaps a digestion day. You see this LV in here, we could see price bounce back and just kind of fill in that LV in and hold. I would say that any bounce is likely going to be seen as a selling opportunity for a continuation downward into 41.74. Now, if I back this thing out to a larger time frame here, or showing more of that recent trading behavior, here is 45.58, the top of the key range, and here is the July high at 46.70. Look how price tried to hold above those zones here and here, and really couldn't get that acceptance required to see a continuation higher. Instead, it failed to hold above those zones, and what I was talking about before was any failure to hold would suggest a return back toward the center of the range at 42.26, followed by a continuation into 38.93. So we could be looking at much more weakness ahead, given the failed range expansion. And again, we've seen these markets do this for some time, where it sees a massive sell-off, but given the overall uptrending behavior over the last 5 years or so, these major pullback events will lead to buying opportunities down the road. The thing is, we may not see a good, decent area to buy until we see much lower price levels into 3,900, those recent lows. So we'll see how this continues to play out. But overall, look for further weakness in the near term until we see that major bottom, and we'll be looking out for that. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.